This is the Rational Reminder Podcast, a weekly reality check on sensible investing and financial decision-making from two Canadians. We are hosted by me, Benjamin Felix, and Cameron Passmore, portfolio managers at PWL Capital.
Welcome to episode 276, and this week we have an interesting and I would say a little different take for everybody. We had a chance to speak with Darin Soat, who is a YouTube Finfluencer, I think it's safe to say. Ben, so why don't you give us the backstory?
Well, he's not a Finfluencer because he's been anonymous up until the release of this episode.
True.
So this is a I don't know what I would call it, a side quest of this episode is the fact that Darin is for the first time associating his actual identity as a person with his YouTube channel, How Money Works. So How Money Works is a large YouTube channel that has, I have to check the number of subscribers, but 839,000 subscribers.
Wow.
So it's as far as finance YouTube channels go, it's one of the larger ones.
Yep.
He does a great job covering a whole bunch of topics, but he talks about it in when we ask him about the channel. He really tries to provide sensible information and debunk myths and combat the side hustle and passive income courses that people are always trying to sell. So in a lot of ways, he's very aligned with the type of content that we try to produce. He just makes it more entertaining than we do.
But he's up against like the algorithms of how the machinery works in these platforms. It's incredible.
You watch his videos. He does a really good job with pace and with graphics. It really pulls you in and makes it interesting. But then he's able to work in sort of storytelling with really high quality, sensible information that will help people make better decisions. Anyway, so I know Darin because we're in a group chat, I guess, with a small handful of finance YouTubers. So we kind of chat in there occasionally. And then Darin was at Future Proof, the conference that we were at recently, and we met up there. So we kind of, he was already booked to come on the podcast before we met in California. But I just thought it would be, he brings a unique perspective. He's got a background in investment banking, so like he's very well educated in finance. He's fairly philosophically aligned with the way that I think we think about providing information to people. Like he really does want to provide high quality information that will truly help people make better decisions and avoid the hyped up stuff that makes people make bad decisions. So anyway, I offered or asked Darin a while ago if he would want to come on our podcast and just talk about the sort of the inside of, because he's, like I said before, he's not necessarily a Finfluencer, but he's a large YouTuber. He does YouTube full time. So he knows how all of this stuff works inside and out. But he's also spent a lot of time covering the more typical financial influencers and the crypto pumpers and people selling courses and all that kind of stuff. So I think he had some pretty interesting thoughts on how all of that stuff works and how people should approach it. I don't know if he has the solution for how to combat it, but it's a really hard solution. I mean, you hear Darin talk about it. It's like you're fighting against this expertly, precisely designed algorithm designed to give you the information that you're looking for. And if you're looking for bad information, for what we would consider bad information, the algorithm is going to feed it to you. Yep. And people know that. So people wanting to provide bad information, bad in the sense that it's not good for their viewers, but is probably good for them because it enriches them in some way, that content will be fed to you. So it's quite the situation on YouTube. And we briefly talked about this while we were chatting with Darin, that we're talking about YouTube, but you take something then like TikTok and it's just that much worse. But it's kind of a scary state of how people obtain and consume information. Anyway, I'm going on here, but that's my backstory for Darin.
Cool. And if you're a first-time listener or viewer from the How Money Works YouTube channel, great to have you here. Hope you find some value here. So we're good to go, Ben?
I think that's good. This is a atypical episode, I think, just in terms of the
Yep.
type of stuff that we're talking about. But I think it is important and useful information. So hopefully people enjoy it.
All right, here's our conversation with Darin Soat.
Darin Soat, welcome to the Rational Reminder podcast.
Thanks for having me.
So Darin, how do you describe your main YouTube channel, How Money Works?
Yeah, so the way I would describe it is, well, it's really kind of like an area where I could, a platform I could basically make anything that I want to make. But I would say a big focus of the content themes is trying to disprove a misconception people have about personal finance, or just talk about something that's interesting that's maybe not talked about enough. And I try and use my professional experience that I had in banking to add a little bit of perspective to these things, so that it's not just kind of a regurgitation of information. Maybe something I can add that's a little new. So I spend a lot of time researching these topics. More so now than I did previously, because it really is kind of my full-time focus. But a big motivation of what I'm trying to do is dispel a lot of the myths behind maybe the side hustle culture, get rich quick schemes, stock picking, really in order to encourage people to make better financial decisions. And ultimately, I'm motivated out of the fact that I really hate seeing people lose money paying $500 for a course that is going to tell them either something that they could have learned from a YouTube video, or something that is not necessarily good for their own financial decision making, like, for example, a trading course. So in addition to that, I can't really just make all my content about that, because what happens is your content really gets stale. So I have to also talk about things like or I guess I choose to talk about things like, how much it would cost to make an iPhone in America, and why BMW is planning, or was planning on charging $18 a month for heated seats. Basically, the point of the story was telling people about the importance of recurring revenue. So, I like to focus on things that I think people will come away with learning something new, ultimately trying to maybe teach people some of the things that I learned when I was in investment banking, and things that I personally had found valuable or incredibly interesting, ultimately to help people make more informed decisions about maybe their own personal finances, maybe they could apply it in their workplace. For example, when we're talking about recurring revenue, maybe if they're a business owner, how they could implement some sort of recurring revenue model, or whatever. So basically, if I were to summarize it, I would say it's like if I had the editorial section in like Forbes or Bloomberg or what have you, but in video form. So that's kind of the general synopsis of the channel.
Interesting. I mean, what you described aligns pretty closely with what we try to do. So I guess it makes sense that we ended up talking here. You casually alluded a couple times to your background in investment banking. Can you just say a little bit about that?
Yeah. So my career really did. So it really, for about half a decade, was in investment banking. Coming out of college, I started at a small boutique investment bank that focused on healthcare transactions, and kind of around COVID was when deal flow was really starting to dry up. So there was not a lot of transaction work to do at the time, which is when I wanted to get into YouTube. So I had a lot of time on my hands, and so I was inspired by some of the other creators out there, some of the more edutainment creators like Wendover Productions, Real Engineering, but also finance creators like yourself and the Plain Bagel. So I kind of used that inspiration to make my own channel, which at the time was Compounded Daily. And when we talk about influencer businesses, we could talk about why why I decided to change the name to How Money Works. But at the same time, it was a YouTube channel. It wasn't making me money. And so around year 2.5, I made the transition to a San Francisco-based technology investment bank. The founders were incredible, and the opportunity just to get out to San Francisco and have exposure to business out here really not only was a huge learning experience for me, but it was a really big opportunity for my career. Because around year 4, or maybe 3.5, I made a transition to a boutique healthcare investment bank that I really admired, and I think that's when I started to really get overwhelmed. It's very, very smart people, and again, very grateful for the opportunity, but I just got to the point. It was really kind of a breaking point where I was working not only 90 hours a week to focus on the banking work, but also too I had to spend what I had of what was called protected hours, which is an allocated time that I had available to just focus on anything that I wanted to. And as you guys know, if most people probably spend that with their family, I had no other option but to focus on researching, writing, and creating a new YouTube video. So that time was really focused on YouTube and preparing video for my video editor. So fortunately that was outsourced at the time. I wasn't editing the video by then, and it still just got really, really overwhelming. I remember anecdotally, there was a moment when I was so stressed out that I got the first draft of the video from my editor, and then I uploaded it straight to YouTube. And I should have reviewed it because it was riddled with spelling errors. But I made the decision to focus on this full time once it really became a business that was could sustain me, and ultimately it really kind of my passions are education and being creative, and I don't think that there's a better way to do that than with YouTube. So that's kind of a long story about how I went from investment banking to focusing on this full time, but I don't regret it at all, and I definitely enjoy doing this far more than banking. I would say this: one of the things that I do miss about the professional world in banking is that you are surrounded by a bunch of people that can just give you this incredible perspective that at the time I really didn't realize it, but it was used frequently as fodder for my videos, right? But so I don't have that anymore. For example, I just recently got I recently met up with a colleague of mine who I'd worked at, and he was telling me that some VCs with some pretty broad mandates are giving their money to private equity buyout funds right now in order to actually get a return. So that sort of perspective is things that you only get when you are working directly for a bank.
Right.
Just running a YouTube channel, I kind of have to rely on just maybe talking with peers and reading the news.
So that's a question I had for you, Darin. Like, how do you pick topics for your channel?
Yeah. So I would say it's really kind of just keeping my head in, the financial news, try and keep up with all the interesting stuff that Harvard Business Review puts out. Anybody who watches my channel will know that I'm constantly, referring back to reports from HBR. And, as I kind of synthesize this information, then I can kind of use it to make a video, be it just like maybe something that's based on my opinion, or something that is much more like straightforward in terms of what the research says. And so again, I say some of it's a little bit of like a editorial focus where I synthesize this information and I use it to say, people who, for example, one of my videos talks about how company loyalty is a thing of the past, and people who switch jobs every 2 years tend to earn more than their peers who just stay loyal to one particular company, right? And that sort of research I use to basically make the conclusion, you need to be selfish and look out for your own career, and you need to look out for yourself. And so those ideas, I would say kind of are, the ones based more on opinion. Whereas, sometimes I just try and be straightforward about, what's happening in the world of finance, just trying to present the facts on the Evergrande crisis, right? It really, it's really, and honestly, over time, you kind of get a good feel of what your audience wants to hear, but you can't spend too much time just going over those same topics, because your content is going to get stale if you do, and people are going to not listen to you anymore if you just say the same thing over and over and over again. So you have to be creative. You have to talk about something new, and you have to talk about something that other people find valuable and interesting.
Which is an interesting concept when you think about something like, and we'll come back to this later, but just a comment, when you think about something like personal finance, where what you should be doing is pretty straightforward and simple, but you can't really talk about that every day.
Yeah.
How did you decide, or why did you create your channel anonymously?
So when I started the channel, I actually started it as Compounded Daily. And the thinking behind doing that was because I believed at the time, having a name that somebody could recognize that had to relate with finance was kind of an obvious way to brand the channel. At the time, finance channels were taking off, and there was this kind of desire to capture audiences, especially in the finance space. There was high CPMs at the time. Again, this was really around COVID, to kind of bring it back to when I started the channel. I heard a lot of feedback about, so what do you talk about? Chemistry? And that was kind of when I realized that, maybe it's not too obvious what it's about to a general audience, that I needed to change the name of the channel. And so I did. And I also changed a few stylistic things, kind of being a little bit more excited with the narration, and also reducing the amount of time it took to produce a video using, leveraging stock footage like story blocks. But I think the real big reason why I wanted to remain anonymous with the YouTube channel was because I didn't want it to impact my ability to get hired at another investment bank, because at the time the channel wasn't making money. So I really had to focus on what was making me money, which was my job. So if I talked about it, it would probably hurt my chances of getting a job. So I thought the best course of action there was to just remain anonymous with it, until eventually maybe one day it would become something that I could make a career.
So this is, as I understand it, your first time revealing your real identity connected to your channel. How does it feel?
It's a little nerve-wracking, but ultimately it's about time. So, but no, I mean, honestly, I couldn't think of kind of a better way to do it. I love the Rational Reminder podcast, and for my viewers who are going to be watching this, make sure to follow the Rational Reminder podcast. It's incredible.
Thanks.
Yeah, thanks. So let's go back to your career in investment banking. How did your channel impact your work while you were still in investment banking?
Yeah, so I really tried to make a focus of prioritizing all my work in investment banking. Obviously, any bit of free time that I had at my banking job was used to maybe read something that could be used as research in one of my next videos. But for the most part, it was incredibly difficult. It was actually some of the most stressful times of my life. But on the flip side, I would say that again, being surrounded by some of those people gave you perspective into things that you just don't have perspective in if you aren't working in an investment bank. You learn things that you know could be used as research or support for content in the videos that you're producing. Obviously, not anything deal related, but anything to do with macroeconomic trends. And I remember every Monday we would have kind of like an update in the macroeconomy from people in our credit division. And so that was like really, really nice to listen to, because it also was, it gave you perspective, and it really kind of made you smarter when it came to, anything about finance or the economy. And ultimately for me, it made me, I think, valuable in the content I produce, and hopefully I could pass some of that value onto my viewers.
Yeah, it's really interesting. I can kind of relate on some level, because when we started doing content, I was still heavily involved in meeting with clients. And I've scaled that back, and but not being in client meetings, you have less insight into what people are worried about and thinking about, so it makes it a little harder to think of topics.
Yeah. And you can't really there's a lot that CNBC, for example, doesn't capture, right? Or any big news outlet doesn't capture, that you just get from having conversations, like, for example, with private equity funds, right? So changes in credit, how they're, organizing their capital stack for an acquisition, right? Again, some of the more in-depth things that, makes you a little bit smarter when it comes to putting these videos together, but again, isn't really talked about by the major news outlets.
Right. All right. I want to move our conversation toward a topic that you've spent a lot of time covering on your channel, which is financial influencers. And you've just, nailed coverage of this topic. So I got a bunch of questions. How do influencer businesses work?
Yeah. So the way influencer businesses really work is basically it's a marketing. It's selling your attention for some sort of money. So I could speak on it specifically on YouTube, which is how my business works. Is there's really two sources of revenue, which is AdSense and kind of a video, or like a paid video integration. For example, I work with companies like Morning Brew, or I work with educational brands like Brilliant to advertise, do a 1 minute advertising block on the video in exchange for some amount of cash. And so one of the the big problems with that, especially on YouTube, is that you don't really have control over the audience. And one of the things I was thinking of when I wanted to create a YouTube channel was I wanted to create a business that I could ultimately package up and bring to a liquidity event. For at the time, it sounded like an incredible business idea. And then I could sell it. I could ride off into the sunset, make my money, and so be it, right? And so I wanted to create a portfolio of channels. I started another channel called How History Works that talks about anything history based. But what I learned real quickly was that there's this big thing in running a YouTube channel, in that a lot of times people want to hear the same person talk about things, and so there's this key man risk where, for example, let me just explain it like this. On the History channel, I had the writer Sam, who's very good at writing. He's one of the most he's really good at creative writing. And Sam, I had him at the time, do voiceovers for How History Works. I personally think that he is, a better narrator than me. But there was so much audience pushback saying, we need to hear you, that it made it. I ultimately had to take the narration back over, right? And so I quickly learned, one of the good things about investment banking is you kind of have like a good understanding of what a healthy business looks like. You kind get a good sense for those good business vitals, if you will. And key man risk is one of those things that's not good, right? But ultimately, creating the history channel was a way to kind of diversify risk from how money works. But if I'm the key man tied with both of those channels, it ultimately ended up being worse. And ultimately it makes it so that it's not really a good liquidity event, right? So YouTube channels actually make for pretty bad businesses, if I'm honest. It's you don't have control over the algorithm, right? A lot of it is what you feel will be good content, and very often I'm wrong about that, right? There's so many grifters out there, talking about the formulas for making it on YouTube. You'll see like thumbnail grifters on Twitter saying, this thumbnail or that thumbnail, and I don't want to dismiss this idea that thumbnails aren't important. They are, but what I am dismissing is this idea that it's that there's like a magic answer and that there's a clear formula for how YouTube works, and there just isn't, right? It really is kind of just trying your best to understand what your audience wants to hear. And honestly, if you were to come along and try and buy something like that, you would realize really quickly that is hard to replicate. It's hard to really kind of get a feel for what my audience wants to understand. So you can't really package it up, sell it. There is kind of this big key man risk. And so because of that, and again, going back to the, trying to understand good company vitals, I started a newsletter. So I revived the name Compounded Daily, because a newsletter is very similar in the business of YouTube, in the sense that you are selling advertising space. And the challenge though is you don't have the algorithm that pushes your videos with a newsletter. So instead, what you have to do is you really have to use word of mouth. You have to I on my own channel, I give people the video a day early if they subscribe to my newsletter, and I also write an interesting story with that newsletter. Hopefully scaling it to the point that I could actually start to monetize it. So that eliminates the key man risk. That eliminates some of the concerns about liquidity. If I wanted to sell it one day, I look at the multiple that Morning Brew got for their newsletter, and obviously that might be a little bit aspirational, but hopefully one day there could be some sort of sale that would make sense from a business perspective.
Really interesting.
Yeah, it sure is. What problems do you see with personal finance influencers on YouTube today?
I think that there is still, and will be for a long time, huge problems with personal finance influencers on YouTube. And where I like to start with this is just the psyche, right? I remember way back when, before I really started to study finance, that I thought, basically from Hollywood depictions, that finance effectively meant day trading, right? So again, as you can imagine, I was pretty disappointed when I was spending 4 years aligning logos on PowerPoints, and it wasn't nearly as sexy as kind of the stock charts and the candlesticks and all that. So, yep. If you think about a general audience, right, you got to ask, what do they want? They don't want someone telling them to diversify their portfolio. They want a moonshot, right? They want a winner. They want answers. They want the stock picks, right? And obviously that's in conflict with what's sound financial advice. I would actually go as far, I don't even think I'm going far in saying this. That's gambling, right? But I think that's the most egregious example. But even financial advice that people may think sounds good, but might not be suitable for everyone, isn't good. I don't necessarily think discussing credit card benefits is necessarily a problem, but when you say invest passively in an S&P 500 index and call it good, a broad audience isn't necessarily suitable for that sort of advice, right? And to us that's obvious, right? But to kind of a general audience, it's not. And so I guess one of the things that I'm really focused on is I really feel like there is this this divide where you kind of have the the wealth advisors, the finance professionals, and then you have kind of the general public. And there's things that finance professionals will say, like, this is obviously bad advice. This obviously doesn't make sense, right? You obviously shouldn't go all in on Palantir or GameStop, right? But the truth is that there are so many people out there that just don't get that. And so, sometimes the most basic explanations have to be regurgitated over and over and over again. Anyway, getting back on point of, why some of the other problems I see with personal finance influencers, one of the things that you will commonly see is they trying to appeal again to the psyche of fortune, wealth, and success by using extravagant things in their videos as props, usually in order to sell something like a day trading course or some sort of investment class. And so, they'll rent Lamborghinis, they'll rent a mansion and say, if I do this, so can you, for the price of $500, right? And the way I look at personal finance is I actually have kind of that belief of, the index card. There's a book by Harold Pollack where he talks about an index card, and he mentions that, everything that you really need to know about personal finance should really fit on an index card, right? And so when people are selling these courses, it kind of just makes me a little sick because, what are they selling? Well, if they're selling, here's an example. Some people will sell kind of guides on how to do, set up a drop shipping business, right? Well, you have to think, like, if you're selling a course to a general audience, then you should expect that they could follow through on those things that you're telling them to do. So if it's like set up a drop shipping course, okay, well, if I were to set up a drop shipping course, then so can anybody else. And then the barrier to entry is really low. And the problem with businesses where the barriers to entry are really low is that it becomes very, very, very hard to make money from. So when these people are selling money, selling courses to others, basically how to invest your money, how to create a side hustle business, anything along those lines, I think what they're doing is, they're quite literally robbing people because there's no way that somebody can watch or take one of those courses. And if you are paying to take one of those courses, you probably aren't somebody that really has what it takes to go out and start a incredibly lucrative business, right? But if you are somebody that's paying to take those courses, you are somebody that's in need and not somebody that really has so much capital that they just want an extra way to make money, right? So it's one of the most frustrating things. And one of the last things I'll say about this is everyone thinks like it's only kind of unsophisticated people that would fall for something like this, right? And I just remember when I was younger, right? I had one of my parents who's very well educated telling me that, oh, the Motley Fool recommended these stocks right now. And I'm like, at the time I don't know any better, right? But if you think about it, right, that's not just, people who don't know any better, people who might not be uneducated falling for these things. It's very smart people as well. So it's something that greatly concerns me. And I think I've spent a great deal of my focus on my channel talking about the issues.
It's crazy. It's like, it's a self-selection type situation where people who are prone to being scammed and are in need and are maybe desperate are the ones that the algorithm is going to send to the people who are offering scam courses.
Yeah.
Okay. So
and in the advertising too, you'll see like these YouTube sponsorships from these get rich quick courses.
Always.
And
on my videos, on your videos, everywhere.
Yeah. And it sucks because, it's like, you can't keep up with just trying to say, oh, I don't want this particular ad on my channel. And on their end, they're particularly trying to get their videos on my channel, which is funny because they haven't really watched my videos. But the way I hope is my audience comes out realizing that the course was obviously a scam, and I take their money away from them anyway. But ultimately, I try not to have those ads on my videos.
Can you affect that?
Yeah, through AdSense.
Oh, interesting. Never even looked into that. I'm a very amateur YouTuber. I don't know. Okay, so a question that is obvious in my mind as a follow-on to that discussion just now: how did the problems that you just talked about interact with crypto, or how do? I mean, it's ongoing, I guess.
It's still ongoing. Again, I think you just have to go back to the psyche of the the general public, right? Imagine this: you see Bitcoin get to $1,000. Oh, you think, okay, whatever, right? So be it. And then it goes to $5,000, and it starts to get really serious. And then it goes to $25,000, and then people start paying attention. Yeah. And then it goes to $65,000. And then now you have a bunch of people thinking that there's an industry. You have venture capitalists funding these projects, right? Taking these big, taking these coin allocations that they get, that they can immediately dump on the public market so that they could, pump their returns. But that's a whole nother subject. But the thing about crypto is, it's a lot easier to start a crypto project, which is unregulated, and you could use it to pump a particular coin and dump that coin onto people who are less fortunate, if you will, because I got to think who else is buying some of those projects, right? So CoffeeZilla covers a lot of these crypto scams, where basically what will happen is the founder of the project will hold on to a certain allocation of crypto, right? And then they will find some influencers that they will pay in order to bring attention to that crypto, and then they will sell that crypto to they'll start slowly unwinding their position once the price goes up, right? And obviously, there's some sort of market manipulation there, but it's a lot easier to do than registering a security, maybe going public on the Toronto Stock Exchange or some sort of public exchange, and then kind of using influence to pump up the price of something in order to get some sort of quick buck and make a quick return, right? And so again, I think the problems with crypto is that we could talk about the problems with crypto itself. I personally think none of it makes sense, but there's a lot of people do have conviction that it works, very much kind of like a religion, and because of that, there's kind of this tribalism. And if you think about the tribalism aspect of it, right, when people say you must buy this stock or this crypto and not other cryptos, right, I think that's directly aligned, and I think that's intentional, because people realize that the more people that buy into a particular coin, the more the price will go up, right? So I think the person who said it best was Jamie Dimon, when he said that it's like a decentralized Ponzi scheme, because I've yet to see, and I should caveat, right? I think the thing to do is I guess kind of the only accepted thing to do is caveat that I don't know if blockchain technology or crypto will have some sort of application in the future. But for now, I think that all it's doing is it's a way for people to use their influence to maybe get returns, and some people are making a lot of money on it, but I think a lot of people are losing a lot of money on it. More people are definitely losing a lot of money on it than are making money.
And it's a wealth transfer. I mean, if you look at the data on who's losing money, it's the unsophisticated retail investors. So
yeah, and obviously that's it gives me heartburn when I see people on Twitter talk about how XYZ crypto is let's use Bitcoin for example, is the greatest technology to be invented since the Industrial Revolution, right? I saw that one and I couldn't believe it, right? But the thing is these influencers have massive followings, right? And they say some things that are true, right? They report on news, right? And they have an audience that people think, people find, them entertaining. So they use that influence in order to, pump up whatever crypto that they have. And man, I don't know. Part of it is just like, it's just so internally frustrating that sometimes I can't even like verbalize it. But, I think, for me, it's really just, a lot of people are losing money on it, right? And it's not like a passive investment in the stock market where, it over time, it should be a good investment, right? But it's more so, it's really a gamble. And you're seeing a lot of grifters lose people a lot of money because of it.
Were you offered crypto-related sponsorships?
I was, and to this day, I still get offered crypto-related sponsorships.
Really?
And yeah, something that's worth mentioning about that is crypto companies will offer anywhere from 2 to 3 times more than the typical rate I will have for a sponsorship slot. So,
no kidding.
For example, they will pay roughly $15,000 to $25,000 for an ad integration on one video on my channel.
That's wild.
Yep. But obviously I refuse. I don't believe in working with crypto for obvious reasons.
So you mentioned earlier some of the companies that you do work with. How do you choose which sponsors that you will take?
So I try and have a pretty strict criteria for selecting sponsors. Generally speaking, I don't like touching most things that are finance. My criteria is I like working with newsletters. I tend to find that those are pretty harmless. You could sign up for free, and for them, their business is again advertising, so they make money off selling space on their newsletter to advertisers. But I basically won't work with anything that says if you put your money in X, you can expect that money to grow. So no crypto apps, no art investing, and I will not work with brokerages like Robinhood for obvious reasons, because what I think then is I think that you're giving people the tools for kind of their own financial destruction, and that's not something that I personally am willing to do. I remember seeing, so kind of as a side note, I went to see the movie Dumb Money this past weekend. And before the movie, there was an advertisement for Robinhood, and Robinhood, as a part of their advertisement, it mentioned something along the lines of you got longs, you got shorts, or something like that, as a way to say that we have all these different things that you can we have options that you can buy. And it's like, man, what are you trying to do? These people lose a lot of money from these things, right? If you are somebody who has a considerable amount, let's say you're an accredited investor, I might feel a little differently about that. But for the most part, that advertisement is really trying to get to everybody. I mean, most Robinhood users don't have more than $1,000 in their account, so
right.
It really just kind of is encouraging gambling in a way.
Why is it harder for high quality personal finance information to be seen on YouTube?
It's because YouTube is an entertainment first platform. It's It's it really is the house of Mr. Beast. One example I like to use is someone who is a good friend of mine, and it's Patrick Boyle. If you look at his old lectures, where he might explain something like, the Fama-French five-factor model, that probably doesn't get a lot of views, but is, something that's really important. Maybe not for somebody to understand, about their own personal finance, but if you're trying to learn something about finance, you should probably watch that video instead of watching a day trading video, right? But the issue with that is it's boring. And while it might be interesting to somebody like yourself or me, to a general audience, it's not. So basically, for his more current videos, right, he has to kind of be more news related. He adds a little bit of comedy, dry humor to it, and you have to do that because, again, right, if you think about how Mr. Beast operates his videos, right, every second is trying to keep the viewer watching for a little longer. And if you're watching for a little longer, then that's more people that the video is pushed to, right? And if the video is being pushed to more people, that's more people that watch the video, which is ultimately more revenue for Mr. Beast, which is, or more views, which leads to more revenue and more growth for his brand and more growth to his channel. So like, for example, he'll do something at the beginning where he says, I'm about to throw these Lamborghinis into this grinder and crunch them up. But, you'll see that at the end of the video, right? And then kind of in between, he'll do a bunch of other different things, right? And the whole idea there is to keep people to watch the video for a long period of time. With that comes the fact that you have to basically compete with, clickbait. I try not to use the word clickbait, but you really have to be competitive for clicks. And so what I try and do is, I try my best to balance making sure that, what I say is with the video title and thumbnail is relevant to the video. But, I also make sure, because if I'm not competing for clicks, then I'm not going to be seen over some of these, more nefarious actors on YouTube, right? So I have to, in a way, find ways to be creative with my title that, encourages people to click through. So again, it's it's an incredibly hard thing, especially, if you're a channel like mine that, brings people in and says things that they don't want to hear. Like, it'll be harder for you to retire compared to prior generations. It's, you won't get rich quick, right? And then still get views, right? It's incredibly hard to do that. But ultimately you have to figure out how you can be competitive with others on YouTube. And it really just comes down to being entertaining. Because again, this is all of, YouTube is really, an entertainment first platform. And if you're not entertaining, then, you will not make it on YouTube.
You mentioned briefly earlier side hustles. What do you think people need to understand about just the ideas of a side hustle or of a passive income stream?
One of the biggest grifts I've seen on YouTube is this idea that you shouldn't trade your time for money. And you'll see a lot of these grifters sell these courses about, other businesses that you could start up, right? How you could start buying real estate and ultimately renting that out and, gain equity in that real estate and so forth, right? And the way I see it is, and one of the things that, kind of really gets me is like, trading your time for money is really, I think, other than, having an investment that you could put maybe in the market or you're putting your capital to work, in which case you're trading your capital for money. Trading your time for money is really the only way to make money. And so a lot of people have this idea that, they want to work on a side hustle, right? Because, they want to make a little extra money, right? They want to start a drop shipping course because they could just let that operate. They can go to their day job and they can make money overnight because they're going to be selling things on this drop shipping website. Well, the problem is there are so many people, again, creating drop shipping websites that it's so hard to actually be competitive there. And if you really want to start getting people, to buy your products, you really have to spend some time marketing yourself, right? And obviously that takes a lot of time. So let's say you want to, come home and drive Uber. Totally fine, right? But you should very, very well recognize that you're trading your time for money. So, in that sense, right, if you're willing to make a commitment to doing that, you're more than welcome to, but just understand that, again, you are trading more of your time for money. If you want to spend 90 hours a week in banking and then come home and make YouTube videos, you're more than welcome to do that. But not sure I would recommend it. But I think what people really need to understand is that there's no easy way to make money. And there's a lot of work. I mean, YouTube is a lot of work. You have to constantly be producing content, right? If you're not producing content, the algorithm is going to forget about you. If you are, doing a side hustle, right? Let's say you're mowing lawns, right? You can't just go and mow the same neighbor's lawn every single day, all right? It takes time for grass to grow back. So you have to get a portfolio of clients that you hope to mow lawns for. In order to grow that portfolio, you're going to be spending a lot of time kind of building that out. So I really don't like this idea that it's really easy to just, get into a side hustle that starts making you money. It takes a lot of time, takes a lot of capital in many cases, if you want to buy real estate. And, all things considered, it might be worth questioning whether or not it was really worth it to spend all that time to, maybe start that side hustle to go and mow lawns or whatever, instead of maybe working a little extra overtime at work in order to get more money that you could maybe put to work in a market, right? So I think one of the biggest myths out there, and people are losing a lot of their money to buying courses about these, secrets to side hustles, right? And truly, well, going back to what I said earlier, if it were so easy to do some of these side hustles, then everybody would, well, if everybody is doing them and they're so easy, then you're probably not going to make a lot of money. Another one I see is YouTube automation. This idea that you could use ChatGPT to come up with video topics and so forth. And ChatGPT is creative to some extent, but it's really, really uncreative when everybody else is using the same thing and entering the same prompts. And so it's really hard to make a YouTube channel just based on ChatGPT if you wanted to do that. Right. So the use of AI that's kind of become the new grift, is this idea that you could use AI to not only create the graphics you use in videos. Actually, in some of the videos, we will use AI generated graphic content for like backgrounds and things like that, but it's not something that could totally replace the creative process, which is a huge grift people are trying to sell, again, for $500 or somewhere along those lines.
So further to that, what problems does access to what appears to be smart and successful people through social media cause for the ultimate investors?
So again, I like to put myself in the shoes of the kind of the psyche of everyone, like the people who are watching our content, right? Or not just watching our content, but let's say the psyche of everybody following the latest trend on Twitter and what's trending on Twitter. Or I guess X. One of the most, I think, dangerous things that I see out there is people who are treating people who sound smart as oracles of wisdom, right? There's, to go back to Patrick, one of the videos that he did was kind of the list of the Forbes 30 under 30 people who were, indicted or had some sort of trouble going along with them, including, Sam Bankman-Fried and Charlie Javis, right? And that just goes to show that just because somebody is renowned in something, just because somebody might be a good technologist, doesn't make them a good fintech entrepreneur, right? Just because somebody sounds really, really smart, doesn't necessarily mean that, they have the best investment advice, right? Just because, Kevin O'Leary or what's his name? Mark Cuban feels very strongly about their crypto investments doesn't necessarily mean that, crypto is a good investment, right? So, I think people use this heuristic that, because they're successful, they know what they're talking about. And that's actually kind of dangerous because, they're successful because maybe they had one really good investment, right? Or maybe they were at the right place at the right time. So, people really need to consider survivorship bias when trying to understand, like, is this person, telling me something that is necessarily good for my investing decisions or, what have you. But, I think that I think that, one of the things that I could tell people is just because maybe, somebody is an expert in, astronomy doesn't mean that they're an expert in, the stock market.
Yeah, I mean, the survivorship bias point is huge too. Like, it's the expertise in one domain not necessarily transferring to another is for sure important, but it's almost like luck in one domain. Like, if you think about survivorship bias, someone had a good outcome for whatever reason in one domain. That may not even make them a good source of information for their own domain, but then then people ascribe wisdom to them in other domains because they were successful
Exactly.
in one way. And
Absolutely
it's just it's a total mess. But
Yeah.
it's so common to see people think like, that this wealthy person said I should do this. I've even had in comments on my videos, people have said like, why would I listen to you? You're not even a billionaire or not even a millionaire or whatever. It's like,
Yeah.
what does that have to do with anything?
Yeah. Yeah. And it's, again, like, many of these people made a lot of money based on just one investment, right? And, good on them for making that investment, right? One example I like to use is every time Michael Burry tweets something, there's these Twitter accounts that will say, just in, Michael Burry said this,
Oh, yeah.
right? Assuming that, he has the answer, right? He knows, right? And obviously, like, to us, that's like ridiculous, right? But to a lot of people, it's like, he knows, right? So, yeah.
How do you think people can overcome the allure of, I mean, stuff like what we were just talking about, but also the financial influencers who are out there promising to make them rich? Are they doomed? Like, is it how we struggle with this too.
Mm-hmm.
Because of the selection bias we talked about earlier. Like, the people who want to get rich quick are not going to come and watch my channel talking about low cost index funds.
Yeah. This is something I struggle with, right? Because the algorithm, right, itself is going to put people in front of content they really want to see. I mean, the algorithm is incredible, right? So if people want to see, if they want the answer, if they want to know how to get rich quick, right, they're going to get content that says that, right? Mm-hmm. So how do you overcome the allure? Well, hopefully what I try and do is I try my best to capture people by videos that they might click on and say, like, I have a video thumbnail called the passive income scam, right? Which, if you're watching videos on how to invest or, how to get passive income, you may click on my video, right? I try not to be, because the more clickbaity you get, right, the more people feel like you're discredited, right? But sometimes the way I see it is, it's like, do the ends justify the means here? If people view my video and ultimately don't fall for some of these get rich quick courses, right? So I don't want to say like, the answer is like clickbait. I truly think the answer is people who understand, and I am kind of like speaking to your audience here, people who understand personal finance and the important parts about personal finance, who maybe want to get into who feel like they're also creative, who have charisma and feel like they could tell these stories in interesting ways that could help steer people away from, getting scammed. If you have that creative ability, then get started making content, right? Please. I think part of it is just more voices out there, talking people, off the cliff, than there are voices saying, or trying to make a quick buck off the audience that is looking to invest in, or stock pick or what have you, right? So I think it's a combination of, more voices, and also just trying your best to be creatively competitive with, getting exposure to these audiences, and hopefully, discouraging them from making poor financial decisions.
Man, the clickbait thing is so tough. Like I think my second most viewed video is a video called Reasons to Avoid Index Funds. And it's a little clickbaity, but in the video, I go through all the reasons that people give that you should avoid index funds, and I debunk them. But that's my one video where there's so many comments saying this was clickbait, that this is terrible, whatever. But it's like,
it's important. It's an important message to get across, right? So if ultimately the message is more important than the title, then I say go for it, right? But obviously you don't want to, because it's like, where do you draw the line, right? Because some YouTubers, for example, especially in the finance space, will have a video thumbnail that says something like it's all over, right? And then you watch the video and it's like just updated news about, kind of like decisions that, the Federal Reserve made. They decided to do a rate hike or whatever. And people are like, like, is it really all over? I guess, it might not be, or it might be, but ultimately the information was good information. So, thanks for sharing this, right? And so people really don't get upset. But the problem then becomes like when you do a video that one day it's like it's all over, and another video that, same people will do a thumbnail that says, invest now, and then another video thumbnail the next day, why I'm selling all my stocks or something like that. And so I don't know, it just kind of looks like, it's a bad look. And ultimately I don't want to say like it's okay to do something like that, but ultimately if if you're trying to spread a good message that hopefully looks out for people's best interests, then sometimes you have to be a little bit competitive with those thumbnails.
So you mentioned Robinhood earlier, made me think of this question. How do you think the gamification of investing has affected investors?
Yeah. So I think, so like, when I think of this, I think the obvious one is the subreddit Wall Street Bets, right? And it's done a few things. And I think a good example of this is I went to see the movie Dumb Money. And I was actually getting really frustrated when I was watching that movie, because the whole kind of synopsis behind it was like glorifying the retail investor, sticking it to the man, sticking it to Wall Street, right? And it talked about these people who were clearly in vulnerable positions. Like it literally talked about a nurse, right? It talked about an employee working for like a GameStop retail store, and two college students, right? And these people at the beginning, I said, okay, these people's net worth negative hundreds of thousands of dollars, in some cases negative, maybe a little less than that, maybe negative $50,000. And then it talked about these big billionaires and how much wealth that they had, right? Billion, Gabriel Plotkin, a couple $100 million, right? I think more than that, but a little less than $1 billion. So the whole movie was really kind of like glorifying, basically treating these retail investors as doing something heroic, sticking it to the man, sticking it to Wall Street, rather than making a really, really bad financial decision for themselves, right? And ultimately it paid off for them, but they are the lucky few, right? And that's not a message that the movie gets across. So I think the gamification of investing has really distorted what investing should be. Investing should be something that's not immediate. You should be investing for the long term. You should be investing to, really for retirement. But ultimately, the gamification of it, and apps like Robinhood have turned it into, kind of like a contest to see who can make a lot of money really quickly, right? And the flip side of that is it loses a lot of people, most people, a lot of money really quickly. And again, kind of going back to that whole dumb money thing, the movie. I think a lot of the issue too is kind of this misconception about really kind of who the antagonist is, right? I know in the movie they talked about Melvin Capital, a hedge fund, right? And I think one of the things, and I honestly don't know who the LPs are in Melvin Capital, but one of the things that people tend to forget is that even in hedge funds, there's a lot of Main Street money, and that's an important concept. When people feel like there's kind of like this war between the retail investor and Wall Street, right? What they really don't realize is that many of the time, or very often, it's a war between it's a war between Main Street and Main Street, like retail investors versus retail investors, right? And you might have brought down Melvin Capital, but you also took down your teachers' pension funds, or not obviously they're much more diversified than that, but that's the point. So I think it's done a couple of things. It's kind of it's given people a incorrect understanding of what investing is, and then the second thing is it's kind of it's muddied kind of this perception of financial institutions and what they are, right? Hedge funds, for example. I don't think that's necessarily a product of the gamification of investing. I think that was kind of just me kind of going on my soapbox about things that I don't like about the movie. But I think what it really comes down to is that it's really kind of turned investing into gambling, and people are losing a lot of money, and I don't know when or if these companies will be held accountable for. Free speech laws generally give them the right to advertise in ways that they want. I mean, but truly, I struggle to see some of those advertisements like the ones Robinhood is putting out and say, like, this is a good thing. I tend to think that it's actually not. It's actually pretty bad.
All right. My second to last question for you. Throughout watching your videos, there's often references to what sensible investing actually does look like, and they're always brief little references. But it's I guess like what you said earlier. You make it really entertaining, but then you insert these little tidbits. So for our listeners, what do you think, in your opinion, are the main points that most people need to understand about investing?
So I think the biggest thing that people really need, well, first of all, I need to say this, and I really don't feel like I should have to say this, but I think this is something that that needs to be said, because I like to talk about the things that are obviously good when you should consider what you're consider investing. But the first thing is, let's just debunk the myths, right? Investing will not make you rich. And you invest for retirement. You don't invest to make a quick buck. And then obviously, there's kind of the more general things that everyone needs to say, which is you invest for the long term, invest broadly, diversify. And so I think what people need to know about investing really comes down to this idea that you won't get returns overnight. You're in for the long game, and ultimately you should have that expectation that it's not about playing a game. It's not about trying to make an extra dollar immediately. It's about preparing for a time in the future when you don't have income from, let's say, work, that you need some sort of income, right? And so the whole idea is you invest so that you can retire and have some sort of income when when you're unable to, again, trade your time for money.
Yeah, it's a good way to explain it. It's also like not a game, like you said. And the gamification stuff, it's become a game of not even necessarily trying to win. Like, you use the Wall Street bets example. It's like they get excited about sharing how much money they lost. It's gamifying losing money.
Yeah, and I don't particularly think that's funny, but
No, I don't either.
I guess some people do.
Yeah.
Final question for you, Darin. How do you define success in your life?
Man, so this is actually something that I really thought about kind of around that period when I had finished investment banking, right? And or really kind of, the months leading up to that. I think for success for me is just kind of joy, is really being happy in my life. I thought about if I were to do a whole career in investment banking and I lived a whole life doing that, I'm sure, it would have been super lucrative. Probably could have made a lot of money. Wouldn't have had a lot of time to spend that money. And so, could have passed that money on to another generation, and who knows what they would have done with it. They would have lost it. And so then the question is, was it really worth it? Was it really worth spending my entire life to make all that money, right? So there were parts that I did definitely feel fulfilled about in investment banking, like, closing a deal. Super exciting, right? Especially when you go to the closing dinner with the founders and things like that. But for the most part, it was stressful. And I couldn't imagine living my whole life doing something like that. So I think what it comes down to in joy or happiness for me, or success for me, is optimizing for happiness or joy. Genuinely finding what makes you fulfilled. And for me, I genuinely enjoy being creative, hopefully encouraging people to make smarter decisions with their money using that creativity.
Great answer. Well, Darin, we appreciate you coming onto our podcast to talk about your story and some of the things that you've spent a lot of time covering on your YouTube channel. It's been great.
Awesome. And thanks for having me.
Great to see you again, Darin.